Alright, legends. Let me just put myself ever so slightly there in the middle. Hope you all had a fantastic weekend. Let's do a little bit of technical analysis here on Bitcoin. Okay, we'll see if we have time for some Ethereum analysis as well. So I want to focus on Bitcoin mainly. Go to Ethereum. It's not the time for altcoins yet. Okay, it's not the time for altcoins yet. And as you are all aware, because most of you are Bitcoin maxis, okay, do most of my trading. I do 99, maybe 99 is a little bit high. 97% of my trading I do on Bitcoin, my day trading. Okay, I do have spot bags of altcoins. Sometimes I open up some swing positions on altcoins, but my day trading is mainly here on Bitcoin. Okay, currently in a little bit of a long position here to the upside. I will discuss how we got into that trade. Not easy when Bitcoin forms this type of price action. Okay, there's a couple of examples that I can show you guys here. When Bitcoin does this, okay, when it does this, not easy to get in, because every time you short, you get stopped out. You short, you get stopped out. You short, you get stopped out. And then it does it again. You're like, oh, no, I'm not shorting this one. And it falls down. Okay. It's designed to let you give up. It's designed to let you give up. Okay. With a little bit of experience, you know, okay, with a little bit of experience, you know that when you start seeing these double, triple tops, the price is getting exhausted. Okay, and when there's no more bullish CVD building up and you start seeing bearish CVD, you know that at any point the price is going to turn around. I actually shorted that little top. I shorted that little top. Okay, and I closed my trade in this area. I didn't know it was going to do this. I didn't care. Okay, obviously it would have been nice to benefit from this profit here to the downside, but I shorted this little tippy top right over there, SFP from the high. I shorted this one. Okay, I got stopped out. I got not stopped out to close most of my position inside of that consolidation area, and then price fell to the downside. Okay, it's not about, oh, you could have had so much pressure, profits, because that was not a predictive move. It caught us all off guard. This move caught us all off guard. For me, it was a successful trade. Happy days. But I acknowledge the exhaustion. You top out, you consolidate. You top out, you consolidate. And I knew that that is weakness. There was bearish CVD. There was bearish divergence on the RSI. Okay, and the reason I'm showing you guys that is because a lot of people told me this morning, yes, Dewald, this was extremely difficult to trade. Okay, let's zoom in here on the 5-minute time frame. Okay, this was extremely difficult to trade, but I know from experience, okay, you're either going to get the double bottoms, or you're going to get the triple bottoms, but at some point it's going to turn around. And I want to take advantage of that move. Okay, so what I don't like to see, a little bit of a tip of the trade. Okay, what I don't like to see is that when you make a bottom and price moves up and there's bearish CVD building up, I'm like, oh man, it's going to take the low again, which it did. Okay, so I jumped into, was it this one? I jumped into this long. Took profits at the highs, because always you have to take profits at the highs. And I told the legends, well, this is actually my TP area. That's where I wanted to take profits. And I got stopped out. Bam. And then I told the legends, well, I will consider another, if we get another week to the downside, I will enter again. And now I'm currently in this trade, already took profits at the, well, 0.382. Okay, position is protected. It's a free trade here to the upside, but I'm acknowledging the exhaustion. Price is starting to cool over. And if price does this again, okay, I will be back in. Okay, because I can get in with such great risk management. You don't understand. The risk management is absolutely fantastic. Price moves to the upside. Okay, I protect position. Anyways, just wanted to get that out the way because I did see some comments with people just saying, yeah, you know, it's difficult to get into these trades. I know, you know, and this is why I also posted inside of our Legends Pro community this morning. I am a persistent trader. And when I see what I like and the structure makes sense to me, I will keep on trying. But make no mistake, every time I get stopped out, most often I will get stopped out at break even with a little bit of profit. Okay, because I'm not just going to add, and then I'm down here, and then, you know, I'm looking at liquidation stuff already. No, you know, get in, protect position, take profits. And now there's a good chance that price could reverse here to the downside because it did reject at my TP1 area, the 0.382. Okay, this was TP1. I just posted it to the Legends Pro a couple of minutes ago. I said, guys, TP1 got hit. Who got into the SFP? TP1 got hit. Okay, my TP2 is at the 0.5. And I'll explain now here on the small time frame. I know I'm here on the 5-minute time frame. It's a little bit of scalping, guys. Just a little bit of scalping. But there's a chance that if price, okay, here's a trading scenario. If price comes back down and it does this again, I'm back in. I will get stopped out. But if price dips below and it gets acceptance back above, I will get in. This is a no trade zone. As long as price is below my area of interest, I ain't interested in a long. Okay. Right, because it could do this and then fall again, and I can take advantage of that move. And maybe you form an A, B, C flat. Okay, B takes the low. Okay, anyways, I'm not going to go into Elliott wave theory right now, but basically I saw the exhaustion. And the question is just how many bottoms are you going to get before price starts turning around? And everyone that's trying to catch the bottom continuously gets stopped out. They get tired. Okay, I've longed here, I got stopped out. I've longed here, I got stopped out. And usually by the time people give up, they're like, stuff this, I'm not going to trade it. Price turns around. Okay. And I can see that on CVD because with every bounce, there was bearish CVD. Okay, price dips below, bearish CVD, takes the low every time. Price fell, as price moved up, bearish CVD building up. And every time there's bearish CVD, you're going to take those low. High probability you're going to take the low. But then when price made this low and it moved up and it dipped down, there was bullish CVD. For the first time, there was bullish CVD. And now, if I'm not mistaken, with this little dump here, I think there's already bullish CVD building up against those two pivots. So price could make a higher low and make, you know, maybe that zigzag and continue here to the downside. I'm going to talk about the probabilities here on the smaller time frame. Okay, so first, let's zoom out a little bit. As per the thumbnail, I said it looks like the bulls are losing control. Okay, it really does not look good for the bulls at the moment. So let's go here onto the 1 hour time frame. Okay, maybe let's use the Coinbase chart. Oof, I was doing some levels here on the weekly time frame. Let me just put it back here on the 1 hour time frame. Okay, so before I get to that one, before I scare the crap out of everyone, let's talk about the bullish case scenarios. Okay, let me do this. Let's talk about the bullish case scenarios. Okay, let's turn green. Right, legends. The reason I'm saying it does not look good for the bulls, because once you've made a low, okay, and I'm specifically highlighting this low because on spot exchanges, okay, we have a higher low over here. Okay, so let's talk about this low. Once you make a low, the structure to the upside needs to be a bullish structure. Okay, it needs to be either an impulse 1, 2, 3, 4, 5. It either needs to be a diagonal, leading diagonal 1, 2, 3, 4, 5, ABC, and you continue. Or it needs to be multiple 1-2s, 1, 2, 1, 2, 1, 2, 1, 2, and you get that guard candle to the upside. But it also looks like a diagonal. Now, these are the three that I'm looking for once you make a low, or once you make a high. What are you forming to the downside? What are you forming here to the upside? Now this at the moment is starting to look like the bulls are losing control. Okay, so let me discuss the first bullish case scenario. Leading diagonal, was it? No, not this one. Local bearish. I'm gonna get to it. This one, guys, because I see this one is not training, but I saw this one on social media as well, and I have highlighted many times that this is my lowest probable scenario. Okay, to put it from a percentage perspective, this scenario has less than 1% of playing out, but we have to entertain it. Okay, we formed a 1 in an expanding structure. This is part of an A, B, C to the downside, and it is critical that price forms a higher low and not take this low. Okay, and now you want price to move up in a 1, 2, 3, 4, 5 to go and complete your third wave. This scenario for me carries the lowest probability because there are so many things that's rare about the scenario. The fact that you have an expanding structure, 1% probability. Then you still have a flat corrective structure in an expanding structure, which is even more rare. So you have rareness upon rareness. Okay, eating rare steak over here. Right, so for the bulls, what I would like to see, because once you've created your 1 and your ABC flat in your wave 2, you don't really want to take this low again. Okay. Now, when I zoom into this little structure, well, can we count this as a 1 and a 2, and we're absolutely going to fly here to the upside? Now, again, you know, you're betting against probabilities because price tapped. Okay, if I take this line here out the way, now price tapped to 0.88, which is not an invalidation for a 1 and a 2, and we're going to rip here to the upside. It's not an invalidation, but now again, it impacts probabilities. So you just now have another rareness on top of the rareness on top of the rareness. Okay, for this to be a 1 and maybe an ABC down here to the downside, now you tap the 0.88. Okay, so you want to label this a 1, this a 2, and now we're going up for a 3. Anyways, I'm already in a long position. I will leave a moonbag open. Once my TP2 gets hit, I will leave a moonbag open. If it wants to play out, at least I'll benefit from the momentum here to the upside. But it's not a high probability scenario for me. Okay, and if it does play out, I can tell you guys now, if this scenario does play out, I will save this and I will include it in my course and say it's the first time in history that I have personally seen this on Bitcoin, especially on the 1 hour time frame. I have never seen an expanding structure with a flat and a 1-2 okay, tapping the 0.88 playing out. I've never seen it. So if it does play out, then we've got one for the history books. We literally have one for the history books. Okay, so let's scrap this. One scenario for the bulls, if there's any chance that we are going to keep this low and not take this low, a scenario that carries higher probability than the expanding scenario that I've just discussed is, guys, I cannot count a 1, 2, 3, 4, 5. There's no 4, there's no 5. I cannot count a leading diagonal. Okay, you still have an expanding structure in a wave 1, which is rare. Okay, so the only other structure is that maybe it's not finished and it's only starting a much bigger structure to the upside. Is this one. Okay, but guys, it's so early to talk about a structure like this. Okay, usually I start talking about structures like this when we at least have a wave 3. And then when the wave 4 bounces, okay, you get that wave 4 bounces. That is where I'm saying, like, guys, okay, maybe one more high. We expect a correction. And now there's our opportunity to get in. Leading diagonal, where you have formed a 3-wave structure in a wave 1, 3-wave corrective structure. So preferably we do take this low It would be nice to preferably do take this low and not create a higher low over here, so I can put my wave 2 here. Okay, where you've basically formed a WXY here to the downside, and now you need to move up in a 3-wave structure. So I already know what people are going to tell me. If this scenario had to play out, okay, if this scenario had to play out and price just shoots here to the upside, everyone's going to say, well, Dewald, that expanding structure is playing out. Okay, this one is playing out. Right, that one. But I will give this scenario still the highest probability. Okay, so for the bulls, it's not looking great. Okay, we're very close to this low, and price looks like it wants to take this low, and if it does, it needs to dip below and get acceptance back above. So that's another trading opportunity that I'm waiting for. If price falls to the bottom, it sweeps this low and it starts trading back above. Okay, my long trigger, I know where to put my stop loss. Well, I know where to take profits. There's a good chance that it could come and eat this high. Okay, but just have to stress it's still very early for this scenario over here. So from a bullish perspective, as per the thumbnail and the title that I used today, it doesn't look good for the bulls. Okay, the bearish case scenarios for now looks like it's gaining in probabilities. Okay, and I'm just going to share one bearish case scenario today. There are multiple scenarios, WXYs, triangles that can form over here, but the one that makes the most sense, the one, you know, is basically we're going down to 95, round about $95,000. And it's the one that I also shared. I think I did share this one on Friday. Okay, and I will keep on tracking this scenario because there's definitely a possibility that price is still coming down here to $95,000, $92,000. And I wouldn't be surprised if it even hits $88,000 just to scare the shit out of everyone. Okay, because I saw there's a lot of people watching $95,000. All of a sudden, there's a lot of people watching $95,000. And I know what the market loves to do, and you've heard me say this plenty times. Okay, if too many people are watching a level, you often get the area front run. So maybe it front runs the area, it bounces you on $99,000. Okay, because everyone is watching this zone, or you scare the crap out of everyone and you go to the next area. So I will be keeping an eye on these levels for swing failure patterns. That's the easiest way that I can put it. If I go here onto the 4-hour time frame, okay, and I look at volume, okay, let's go to the 8-hour. Just want to get all the price action in here, and I do this. Okay, let's look at all the volume for this little range, VRVP. Well, you can see at the 1-to-1 extension, and this is most probably why a lot of people are watching this level, because look at this. Okay, but you do have some, you know, that little spike volume. If you want to do some front running, well, that's where it needs to happen. I will carefully be checking the price as it falls to the downside, if it does fall to the downside. But I would not be surprised for price to find support at this level. Okay, just scare these people, because I can just imagine how people are going to long in this area, because now I see that this level for some reason is everywhere on social media. 95k, 100k, 95k, 100k. That's the two levels that I'm seeing. So do not be surprised if we see $87,000, 400, the 1.382, which is a very, very common WXY target. Very common. Ideally, you do not tap the 1.618. It's not an invalidation, it's just a rare target for a WXY. Okay, but you can see you have volume supporting this level as well. But as long as structure remains bullish, you have a low, you have a high, and you have a higher low, there's always a chance for the bulls to come and claim the high again. So, dare I say, from a probabilities perspective, it looks like the bearish case scenarios are starting to carry higher probability. Okay, so locally, let me just go through it here. You have an A, B, C in a W. Okay, you have a 3-wave structure in a WXY in a X, And then when I zoom in, okay, this is potentially what's starting to form over here, is that we have an A, B, C. That's the largest structure, A, B, C. Okay, so can you guys see you can still get upwards momentum here? This is what I'm trying to trade at the moment, because I know it could shoot up here to the high and take this high again. It could definitely in a B. Okay, and you have an A, B, you can create a flat, you take the low, definitely possible that you take the low and then you go up for the C, but you have a three-wave structure in a B, has to be a three-wave structure, and then you fall down in an impulse. So the more price develops, the more this scenario is starting to gain probability. Okay, I'm not saying, guys, this is the scenario that's going to play out. Let's just be prepared, okay? There is a super bullish scenario, the doomsday scenario that I shared on Friday. I'm not going to go through that scenario again. Let's just take it level by level at the moment. For now, it looks like this scenario, okay? I mean, guys, this structure, okay, if I go here onto the 4-hour time frame, this structure here to the upside, this X, okay? This structure counts beautifully as a WXY. Stunning. No mistakes. To try and squeeze the impulse in there, you have to force the structures. Okay, and sometimes you just have to say, well, if it looks like a three-wave structure, if it smells like a three-wave structure and the levels balance like a three-wave structure, well, then maybe it is a three-wave structure, which means we're going to take this low. Okay. So I just want to see, well, how the probability is going to play out at the end of the day. Something that I highlighted to the Legend Pro community this morning is to say that, guys, ignore the noise. Okay, there's a bullish scenario that's carrying lower probability at the moment. There's a bearish scenario. Okay, we trade the levels. We got into a long. Okay, we trade level to level. Day traders, you don't care. You just want volatility. Okay. So locally, what could happen is, go back here onto the 1-hour time frame. Locally, what could happen is this could be an ABC that's come to an end. And an ABC gives you a B wave. Okay, and I must say that this structure, this little structure, for me personally counts better as a three-wave structure. Okay, because if I go here onto the Binance chart, okay, on Coinbase we have this little wick here to the downside that we don't have, okay, on Binance. But if, guys, this is now nitty gritty stuff, okay, this is really nitty gritty stuff. But if I go into this little structure on the 1-minute time frame, remember, for a 1 and a 2 and a 3 and a 4 and a 5 to the downside, you have to count 5 waves in this structure. Have to count 5 waves. So I can count a 1, a flat, running flat in a 2, and then I can count a 3 and a tiny 4 and a 5. But look at how big this number 2 is compared to the 4. It's massive. So I can count a 1, 2, 3, 4, 5. Okay, it's not pretty, because ideally what you want to see is a 1, 2, 3, 4, 5. Okay, you want a larger 4. Ideally, even larger 4, larger than your number 2. It's not an invalidation, okay, but I spent some time here on the 1-minute time frame, and I must say it does count better as a 3-wave structure. Okay, A, B, C. 1, 2, 3, 4, 5 in a C wave. It does count better as a 3-wave structure, which means that if this is an ABC, that either gives you a W or a A, but it gives you a 3-wave structure. So if I now go back here onto the 3-minute chart, just get some more price action in here. So what I am trying to figure out, guys, the reason I'm so obsessed about this little move, okay, because is it a 1, 2, 3, 4, 5? And if it's going to create a 5-wave move to the downside, it's going to start giving that bearish case scenario that I've just shared lower probability. Okay. But if it's a ABC or a WXY, and this is the end for now, and we go back up in a C wave, then it looks bullish, but it actually gives the bearish case scenario higher probability. Okay, because you have a 3-wave structure in a wave B. You cannot have a 5-wave structure in a wave B. Right, so anyways, guys, so one of the scenarios that I am keeping in mind, okay, and this is some of the stuff that we went through this morning as the pro community, okay. One of the scenarios is if I entertain this as a 5-wave structure, you have a 1, 2, 3 that ended over here. We're busy forming a 3-wave structure and a wave 4, and we could go down in another 5-wave structure. The reason I have the parallel channel is something that I've started sharing with the pro community is just some channeling in Elliott wave theory. Okay, ideally you do not want the 4th wave to get acceptance back inside the channel. Usually when it taps the top of the channel, it invalidates a 4th wave, but I mean, I already have my invalidation here. Invalidation for 5th wave, okay, it's the 0.618 when you take a flip from the high to the low. Right, so I would actually like to see this impulse being invalidated in a 3-wave structure. I would like this to be the end for now. Okay, you can see price broke the trend beautifully. Maybe it comes back for retest and continuation, gets acceptance, invalidates the 4th wave, especially when you tap this line. And then maybe we're going to get a larger C wave to the upside. So guys, these are all bigger moves, but locally, okay, this is how we traded it this morning. So if I go here, let me just clean up some stuff. Where's that parallel channel? Here we go. Let me switch this off. Okay, so this morning I knew that this is either an ABC or it's a 1, 2, 3, 4, 5. Okay, you're just going to get this extra in a 5-wave structure. And like I said during the beginning of the stream, I could already count a 1, 2, 3, 4, 5. And I was like, okay, is this the end? Okay. And then I started highlighting to the pro community, I will accept double, triple tops at the bottom. Because, you know, once you've had the big move with the highest amount of volume already to the downside and price starts chopping like this, takes the low, you know that it's going to start turning around at some point. Okay, so I know it's frustrating to trade this, but it does come with experience. Okay, can you get stopped out multiple times at break even? Or, you know, according to your plan, how do you trade this? Right, so to make it easy, in a 5-wave structure to the downside, 1, 2, 3, 4, 5, price needs to reject at the maximum target of the 0.5 Fibonacci. So this is the trade that we are in. Well, I am in. Okay, I know some of the legends took this trade together with me. This is the trade that I am in at the moment. I already took profits at the 0.382 when I take a flip from that high to the low. Okay, TP1 already got hit. Beautiful. If I get stopped out, I get stopped out with profits because my position is protected. Okay, maximum target for your 4th wave is the 0.5. That's where I plan to take profits to. And then I will leave a bag open for if it wants to go higher. Because the reason I am taking profits here, and I'm taking profits here, because some people are going to say, well, Dewald, if this is an ABC, why don't you just enter like a crazy maniac and only take profits when you hit the high? No, because you could still do this. I can't. I have to pay myself. I've worked hard to get this entry. I've got stopped out twice to get this entry. Okay, I worked hard to get in. I need to pay myself. Pay myself. If it wants to go up, then that's where the moonbag will do its job. Okay, so after a 3-wave structure, if it does reject at the 0.5, there's a good chance it's going to take the low. So I am looking for a recovery back above where I will play along. Or you could even take this, SFP. That would be beautiful. SFP from the lows, where you form a 1, 2, 3, 4, 5. You swing the lows, you get acceptance back above, you know where to put your stop loss, because after a 5-wave move down, you usually get a 3-wave move back up, and you can take advantage of that move. But then there is where I'm going to be looking for shorting opportunities. Make no mistake, if we have a 5-wave move down and a 3-wave move up, okay, I'm going to be looking for shorts in this zone. I'm going to be looking for longs in this zone. So it's about reading the structure as price develops. Okay, sometimes what happens, guys, is I'm looking at a level and then price does something that I don't want to see. And I will change my plan. I will not take the trade. I will look for a different trading setup. So depending on how price develops, okay, I'm now doing this live stream right now. Maybe tomorrow I'm going to say, well, this is how it played out and I changed my mind and this is where we longed or shorted, or whatever the case might be. So I need the structure to show me the way. Okay. Right. Let me just put myself back here on blue because, you know, I just left myself there on green, all the bullish case scenarios. If you'd like to trade on the exchanges that I trade on a daily basis, I've got Bluffin, Weeks, and BTCC. Legends Pro community link down in the description. Also your way to support the channel, and it costs you nothing extra. You only benefit from the biggest deals. Bluffin, you can win that iPhone 17. You also get money airdropped into your account the more you trade. Okay, Weeks gives you that 50% cash back on the money that you deposit in your features account, but it's only for new subscribers if you sign up today. Okay, right. Also get upgraded to VIP status 1. You get 25% discount on your trading fees. And BTCC, guys, I am enjoying trading on BTCC because I can trade gold, Meta, Tesla, silver. Okay, you can trade commodities as well. And if you guys want real-time updates from myself and the coaches, well, this is where you join our pro community. Just want to see what is CVD doing here at the moment. So you guys know, this is what I like to see. This is what I love to see. Let's do a little bit of a recap over here. Okay, I'm here on the 5-minute time frame. So let me grab my pen. Can you see when price, okay, climbed up here and it fell, okay, and it did that? Can you see this? It's not good, guys. When you make a nice small little bounce like that, so when you play this SFP and price bounces and it does this, maybe you should get out, okay, or just protect position. So that's the first thing I saw. With every bounce you got bearish CVD. Okay, fucking massive bearish CVD, bearish CVD, bearish CVD, which means every time you're going to take the low, price falls, it jumps to the upside, and there's bearish CVD. Okay, which means that you're going to take the low, which it did. Okay, then price took this low. Okay, price took the low. Just trying to highlight where the hell is that low. Is it this one over here? Maybe it's this one. Okay, it went back up and it formed bearish CVD. Okay, against those pivots, bearish, 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 more bearish CVD. So what I'm trying to demonstrate over here is every time I played the swing failure pattern and price moved up, I got bearish CVD. This is why when I played this one, because this is the one I played, price moved up, I saw the bearish CVD. I was like, fuck no, let me take profits and protect my position. Okay, then price made this low. Okay, now this is where the difference is. Once price took the low again, it fell and it started climbing to the upside. CVD tanked. Now that's what I like to see, which tells me people are now tired of trying to catch the bottoms. They're tired, they've given up. Now they're just saying, okay, let's short. And it shows me that they shorted. Okay, took the high, no bearish CVD. Took the high, no bearish CVD. And now between these two pivots, I still see bullish CVD. Still see bullish CVD. So there's a chance that price could zigzag over here and then maybe fall to the downside, as per the scenarios that I've just highlighted. So for me, CVD is the only indicator that I use. I do not use any other indicators. I trade price action, but CVD sometimes gives me a clue that when I trade price action and I get into a trade, like I did this morning, I get into the trade, I got into this trade, okay, that's where I entered, and price moves up, and I see bearish CVD. It's a good sign to take profits. Yes, it can continue, guys, and this is why you have a protected position. You take some profits, not all of it, and if it wants to continue, let it continue. But at least if you get stopped out, I got stopped out with profits. Big difference, guys, big difference between taking a loss every time when you get stopped out, or reading CVD and, you know, just, oh, guys, without CVD, you know, it's just a golden rule. You claim local highs, you take profits. You claim the local highs and you start rejecting, you take profits. Okay, if price had to fall there and there was bullish CVD building up, I would have said, okay, now that looks better. Okay, I'm leaving the position. Right, so just wanted to quickly take you guys through that. So now price has, for the moment, price has broken out of this little trend line that I was keeping an eye on. I had it like this. It was too choppy for me. I rather, you know, I told it, I'm rather going to play the SFPs. Okay, I'm rather going to play the local bottoms. Got in over here. Broke the trend. Now it's coming back for retest. Maybe if you want to load a little bit, still have a protected position. I'm just leaving this trade for the moment. So this is how I'm trading, guys. This is how I am trading these scenarios at the moment. Okay. Loads of comments. Mr. SGS Legends, welcome in the house. Which indicator you use for CVD? It is on the charts.aggr.trade. I think you should be able to see it here. Okay. You're going to need a script, and you can only get the script if you join our community, because I can't share scripts on YouTube, guys. I can't share file attachments. So your thing might look a little bit different. It might look something like this. Let me delete this. Now I even have a CVD script for Ethereum. I even have one for ETH. Just want to see something, yeah. Okay, there's bearish CVD for some reason on ETH. I haven't used the one for Ethereum. Okay, but it is a free indicator. You just need the script. You need to join our community if you want access to the script. There's just no other way for me to share it. Okay. Anyways, if I delete this one as well, let me just take this one out, because I can just load them again. If you land on the website, it will look like this. It will most probably default to the 5-second chart. Just go here to the 5-minute time frame. Okay, you will still get a CVD line. It's there at the bottom, the green line. You can still read CVD. It's not as nice as the script that we have. Okay, but you can still see CVD. Okay, no bearish. Okay, I can still read the bearish. Okay, there was your bearish CVD. I can see it already. Just using the normal script over here, I can see that there was bearish CVD. Look at that. Price took the low. Okay, it's nothing. It's very neutral at the moment. But you only have one line. Hi everyone, RM, welcome. Dewald, in 3 minutes, is it bearish CVD now? Just checking. 3 minutes. Oh, and I need to go load up. Sorry, I can't check now. I need to go and load up those scripts again. Okay, I just deleted the scripts. Right. Hey people. Okay, let's quickly have a look here on ETH. ETH is holding on, guys. I'm not going to spend a lot of time here on ETH. If you want more detailed technical analysis on ETH, go check out Friday's live stream. I did detailed technical analysis on Friday on ETH. Okay, but looking at the 4-hour, ETH Bitcoin is still going to take that little correction to the downside. While you do have a 3-wave structure in a A, you have maybe your B, or you have your B, sorry, in a triangle. B waves can form triangles, and then you get 1, 2, 3, 4, 5. So this is still my primary scenario on Ethereum. I'm still expecting lower. Okay, from a bullish perspective, okay, you can either just trade the levels, but I was looking at this little consolidation here, okay, the value area range. At the moment, and this is bearish, guys, at the moment, when I look at this, oops, where's my pen? when I look at this, price is below the value area low. And that is bearish. Now the question is it going to form a deviation and get acceptance back above? Now that's a long entry, guys. When you see the strength, that is a long entry. I'm not willing to long this or to long this because it could dump. And then it, you know, you're underwater. I want to see a sign of strength. And then also I know where to put my stop loss. So from a bearish perspective is you have an A, B, C, D, E. Okay, maybe D moves over here if it took the low. So D needs to move over there. Triangle becomes a little bit bigger. You have a three-wave structure down and a D, which is fine. A, B, C, D, E. Maybe you reject here by the point of control and then all hell breaks loose and you fall to the downside. In the bullish case scenario, okay, you basically form an A, B, C. Okay, because you took these lows. You're going to form a larger triangle, guys. A, B, C, D, E, and then you move up. So maybe, you know, it's just going to range for much longer, but it's not, it's exactly like the bullish case scenarios on Bitcoin. Like, it feels like you have to force the structures. The bearish structure just works. Okay. The bullish structures, you have to like force the counts. Okay. If you, this is an A, and now you have a B, okay, and this is now, this can't be a C, D, E because you took the lows. It's not allowed to do that. So now you extend, and it's just not pretty. Okay, so make no mistake, from a simplicity perspective, if you are bullish on ETH and you believe it's going to run to the upside, well, wait for the sign of strength. Okay, wait for the sign of strength. You have 3 high volume nodes to compete with over here. And it could go back up and reject at any of those nodes to the downside. That's also where I'll be looking for shorting opportunities if I was to day trade Ethereum. But at the moment, it doesn't really look great. Okay, this could also be a 1, 2, 3, 4, 5, A, B, C, bang, to the downside. Okay, which basically equals your E wave over here. So it does look, I mean, it just looks like the bulls are gaining control here at the moment. Right, so basically we are cooked for another few. Well, if this scenario had to play out, okay, let's put some time onto this scenario. Okay, you have an impulse to the upside. Beautiful. And this is just a corrective structure. And if it's going to play out exactly the way that I've got it drawn here, then you're looking for this corrective structure to end by the end of November. So maybe December and January, we're going to get an explosion here to the upside. Okay, 5 waves up, 3 waves down, you continue momentum in this direction. Okay. Right. Dewald, if it closes 1 or 2 weekly candles below 100k, will you switch to macro bearish outlook? It depends on the structure. Because I've seen weekly candles close below certain levels, which made the world bearish, and there was I buying, because the structure was still intact. Okay, I remember, if I go to the daily time frame, okay, now I've got a lot of stuff open here, let me just clean it up. I remember when we had this dip, this one, there was a lot of people capitulating. There was a lot of people selling everything they have in crypto. I saw big influencers posting on social media, I've exited all my positions. Yeah. Weekly candles below this level is not looking good, it's bearish, and I was singing the song, guys, the structure is still intact, you know, just from a structural perspective, I was just singing this song the whole time. Guys, we have a low, we have a high, and as long as we form a higher low, I'm looking for momentum to the upside. And then there was also some details that I went into the structure. Based on the structure, there was still a high probability to claim that high before we claim the low. So from an Elliott wave perspective, I was also able to identify that it's still going to turn around. When people started capitulating and we hit extreme fear in this zone, that's where I bought. So to answer your question, if I see weekly candle closes below 100K, I'm not selling unless the structure tells me that I need to sell. Okay, because worst case scenario, let's go to the doomsday. Okay, you asked for it. You want to see the doomsday scenario. Okay, I'm waiting for this. Okay, are you ready? Are you ready? Okay, for the moment, let's keep it simple. You have a low and you have a high. And as long as price finds its feet, you have a higher low for continuation. Okay, doomsday scenario is as follow. This is where I will sell. Okay, I want to see this. I want price to claim the lows. Because after you have a 1, 2, 3, 4, 5 to the upside, it has to correct itself. And once it corrects itself, that is where I get out. But I need the structure to show me the way. So it needs to eat up the low, and I'm going to exit my positions here. Okay. Not going to price falls here, it's below 100K, we have a weekly candle close below, people sell like crazy maniacs, exactly what happened over there, and then price says whoop up, it continues momentum. I'd rather wait for this. I'm waiting for this before I consider any selling. Okay, and guys, I'm not a financial advisor. You are in control of your own assets, your own crypto, your own silver, gold, whatever you have invested. I'm just sharing with you my plan. This is how I am going to exit the market. If you want to exit the market because based on your strategy, you need to wait for weekly candle closes below the $100,000 area mark. And if you see a weekly candle close below and it's part of your trading strategy, by all means, exit. I cannot tell you what your strategy or what you need to do with your strategy. Okay. But I am telling you, I am not going to exit. No, I'm not going to exit. Because if you exit here, there's still a chance for price to reverse. But if I wait for this, there's still a chance for me to exit exactly where you exited. Still a chance for me. Okay. But I need the structure to show me that it is bearish. I need the low to be taken. Right. Okay, like, yeah, look at this. Beautiful, man. Beautiful. You fall in a 5-wave structure. You get a retracement, you exit. Okay, because you took the low. 1, 2, 3, 4, 5. You took the low. You're now creating a lower low compared to this low. That's where you exit. That's my strategy. I'm not going to exit here. Because maybe I still have some profits, okay, that I can make before I exit. Right. Just want to see something. I agree, must exit on retracement. Over the last few days, you seem to be entertaining a possibility of extended cycle. Is that fair to say? Yes, Silver. I mean, based on the probabilities, I mean, and the structure needs to show me the way, but based on probabilities at the moment, okay, without me even, guys, let's just do this for a moment, because I know everyone is talking about the 4-year cycle theory. It's being invalidated. It was supposed to come to an end a couple of days ago. One thing I do want to highlight is that the 4-year cycle theory is never to the day 4 years. Sometimes it runs a little bit over. It can go over three months, no problem, and it's still within range. Okay, but based on the 4-year cycle theory, perhaps, okay, we still have a lot of volume and support. We have support, we have support, we have support, and we have a low. And as long as price bounces on any of those levels, we have a chance for the bull market to continue because structure is still intact, just from a simplicity perspective. I do not know why people are turning so bearish when the structure is still intact. Because people are trying to preempt the bearishness. They want price to fall, okay, and then they want to say, I was right, I told you the bear market is starting. Well, then once this happens, I'm also going to tell you, well, bear market is starting, guys. Let's look at exiting over here. Okay, people are running, front running well, how can I say it? How do they say it? They front running the gun. I don't know. There's a saying, guys. I can't remember it now. Okay, but we still have a lot of support. Okay, look at how we got the bounce at this level. Massive volume, massive volume, massive volume. We still have a lot of support in this zone before we can talk about bear markets. So yes, my hypothesis is that I think we're still going to go up. We still have a lot of support. We have a low, we have a high. There's still a lot that needs to happen here before we can talk about a bear market. Okay, I know some people are looking at the 200-day moving average. I don't even know if I have it here. Let's see. 200-day moving average. Let's see. Is it on the weekly? Guys, I don't even know how to use these moving averages. People like treat these things like gospel. I just trade my levels. Okay, maybe I have it wrong, guys. Maybe I need to change settings. Maybe one of the pro members inside of our community can tell me, Dewald, you know, here's the settings. This is how you set it, and then we can start talking about it. But I don't even know how to use these settings. What do? I don't even know. I don't use moving averages, guys. I don't. Okay, at the moment it's chopping and it's fine. It looks like, but I mean, look at this. Okay, 200-day moving average. That's why people were selling. I can just imagine that's why people were selling. We're below the 200-day moving average. We're going into a bear market. We're going to retest it as resistance and reject, and look what happened. Deviation, get acceptance back above. Okay, you could get a deviation and acceptance back above. I don't know, guys. Moving averages for me is, it doesn't fit my style of trading. I'm not saying it's shit. I'm just saying I struggle with moving averages. I don't know how people trade them. Okay, because I can tell you now, I can take a Fibonacci, okay, and I can do this, right? And I will be paying attention to these levels. I will be paying attention to the one, well, we're below the one extension now, to the 1.382, the 1.6, the 2 extension. I can trade these levels because price dips below. Guess what? I know where to put my stop loss, and I have a beautiful trade. Okay, price dips below, trade. Price dips below, trade. Okay, so I can trade my levels, supported by volume. Okay, for now, this still looks like a leading diagonal, guys. 1, 2, 3, 4, 5, A, B, C, which is either done. It doesn't look good, so that either gives you a A or a W. Okay, I prefer W. You go up in a 3-wave structure. That's either your B or your X, and you go down for another C. So it's either A, B, C, and it goes a little bit deeper, or it's a W, X, Y. Okay, $95,000. Right, so for the moment, it still looks corrective. Just looking at BTC chart on the weekly, disregarding all the 4-year cycle and the rest of the noise, it looks very bullish structure to me. I see strength, not weakness, so still think it goes higher. Yeah, I don't know why people are panicking, okay? Yes, we could, guys, we could go into a bear market. No one knows. Everyone is just speculating at the moment. Structurally, the market is still intact. Okay, I mean, it looks beautiful on the weekly time frame. The trend is your friend until the end. And the trend is still up. You still have a high, a low, higher high, higher low, higher high, higher low, higher high. Well, for now, you still have a higher low. So you need to start talking about a bear market once we take this low. Okay, I don't know why people are trying to call for a bear market inside of this structure. Okay, yes, it is dangerous, guys, because, you know, we also, myself and Andy always say, oh God, when we have a 5-wave structure to the downside, oh, we need to start being careful. I know, I agree. I agree. When you have a 5-wave structure to the downside, 1, 2, 3, 4, 5, three-wave structure to the upside, you could absolutely tank. Okay, and I would rather wait for the tank to take the low at $74,000, because I also know that not all exchanges made a higher low over here. So on Binance, on Bybit, on most of the other exchanges, okay, we have a three-wave structure down. You see, now this is where it becomes confusing. You have a three-wave structure down. There's no 4 and 5. Only on the spot exchanges like Coinbase do you have a 5-wave structure. And then also, you can't end something in a three-wave structure to the upside. When you end something with a three-wave structure, it's usually a wave B. And then anything to the downside is either a wave C or a Y. Which means at some point, you are going to eat up that high again. It's just reading, reading the structures at the end of the day. The only way that you can end a bull market in a three-wave structure is if it's an ending diagonal. It's the only way you can end the bull market. But now here's a problem. You have a problem over here. I would have liked to see all exchanges show a clean 5-wave structure to the downside. So based on the mess, all exchanges not being aligned, we have the possibility of an ABC, okay? You have a 1, 2, 3, 4, 5 contracting leading diagonal. You have a 3-wave structure in A, 3-wave structure in B, and a C wave can be, or a Y can be a 3-wave structure to the downside. So there's a chance that this could be the low, or it forms a larger corrective structure, and then it continues to the upside. So I cannot start talking about a bear market. So now you're going to ask yourself, well, Dewald, what will make you start talking about a bear market if price continues to the upside? So if price did this, if price did that, I would have said, danger, Mr. Robinson, danger, danger, because then you have a 1, 2, 3, 4, 5. Now, you can end a bull market on a 5-wave structure. That is dangerous. Because if I look here on the daily time frame, let's just go back here to what happened in the previous bull cycle. Okay. Well, you have 1, 2, 3, 4, 5. Now that is dangerous. Now that is very dangerous. And then here it looks like you have 1, 2, 3, 4, 5, A, B, C, and you continue W, X, Y. Okay, start the bear market to the downside. Right. 1, 2, 3, 4. Okay, yeah, it got very choppy. This was not an easy one to trade, by the way, because it looks like a 5-wave structure. Is it a 5-wave? Is it not a 5-wave structure? Yeah, it's just holding. Okay, not an easy one to trade. Anyways, legends, don't be blinded. We do have 6 billion in liquidity above us. Yes, Dewald, I told you this time is different. Satoshi. Dewald, 50-week EMA. 50. I will get the moving averages on here. I'm sure you guys are keeping an eye on all the EMAs. 50 EMA, 280, 22, 33, 44. You've got all the EMAs. I don't care about the EMAs. Okay, I really don't care about the EMAs because structure has always shown me the way. And remember, there's a saying in trading that says structure becomes structure before anything else. Structure before anything else. It comes before moving averages, it comes before Elliott wave theory, it comes before trend lines, it becomes before anything else. You have to look at structure. Structure always shows the way. Okay, right, legends, I've unfortunately run out of time. Remember to smash up that like button if you haven't done so already. If you want to trade on the exchanges that I use, links are down in the description where you qualify for the best deals. It doesn't cost you anything extra. If you want to join our Legends Pro community, link down in the description. Have an awesome Monday. Until the next one, cheers for now.